Taking profit is arguably one of the most important and sometimes difficult things to do as a crypto trader. Why as a crypto trader? Well, in stocks, you're happy about a 2% gain. In crypto, you're going to see a chart go up 5%, and then all of a sudden it's going to shoot up 150% like Doge did. Or worse yet, Peanut shooting up, 2,000% in a day? In crypto, we have so many opportunities to make tons of cash, but the reality is that so many times it just slips out of our hands. It's just so close yet so far away. In this video, I'm going to give you everything you need to know in order to master taking profit in the bull run to come. Do not go anywhere. You're going to learn a ton of stuff in this video. And before I go any further, subscribe to this channel. There's going to be way more content shared on this channel throughout the bull run. You do not want to miss a single video. Turn on the notifications, like the video, and most importantly, as I'm going through, take notes. Write down physical notes. This is not a pen or a piece of paper, but take down physical notes so that way you are learning something as you are watching this video. The last thing I want you to do at the end of this video is just click next. You're not learning anything. Honestly, this is what I do. I am a teacher. I am actually an educator, and I'm such a good educator that my lamp just died. That's so sad. We're going to keep pushing forward though, because I have a lot that I want to share with you. And it all starts with a very simple spreadsheet. We're going to start here first because sometimes it's a lot easier to use a spreadsheet to visualize numbers, especially when we start talking about multiple positions and things like that. A lot of you have various portfolio sizes, right? So I'm just going to use $10,000. It's a nice round number. Now, the reality here is that while not all of you may have $10,000, some of you may have 10 times that or 10 times less. The reality is that many of you are completely underutilizing your portfolio size. When we look at this chart, it says total positions 50, meaning that you have 50 open trades right now of varying sizes. I think this is probably a lot of you watching this video right now. If it is, don't leave a comment because that's embarrassing, but at least write it down. This is me, okay? When I approach trading, my goal is to keep things as well balanced as I can. I have videos on my own YouTube channel. The link for that is down in the description of the video, where I talk about position sizing. I talk about portfolio allocation. This is a lot of stuff that people think is a total snooze fest. But the problem is that a lot of those people that think it's a snooze fest, wait, it's this way. They're the ones that have like 50 open positions and only $200 allocated per position. Or worse yet, you are a shrimp, you are a sub shrimp, you are a shrimpy shrimp, and you only put like $2 into a trade. Like that's the dumbest thing you could possibly do. Don't do that. You want to use your funds well. You have to use your funds well. If you don't, you are severely handicapping yourself, okay? What I need you to get from this video is understanding two core principles, and I'm going to write them down up here so you don't forget. The first one is that position sizing matters. It matters how much you put into each position. And I also want you to burn this into your brain. Less is more. I teach this in our courses at the Better Traders. I teach this on my YouTube channel, and I've been teaching it bit by bit through these videos here on the Coin Bureau Trading channel. But essentially, this is my ethos. This is how I function as a trader. Less is more. Having less open positions is going to be less stressful, and having less open positions at any one time means it's way more manageable, and I'm actually going to be putting more of my funds into each position, therefore making more profit per position. Now, if I have 50 total positions, I mean, that's great, but if I'm evenly distributing my funds, which is highly unlikely, but let's just entertain this, then that means I'm going to be putting about $200 into each position. Some of those positions might 10x, which would be amazing. So then I would be walking away with $2,000. That's going to feel really nice. But the problem is that I'll have other positions that won't do anything, or some of them might only go up 10%, while others are going to shoot up 1,000%, 2,000%. When we come across our portfolios and we look at it realistically, how many of you have just bought coins because someone's talking about it on X, someone's talking about it on YouTube, someone's talking about it on Reddit, or you hear about it from a friend who's a crypto bro and they're in the know, they went to conferences, they know what coins to buy. We've all been there. There's nothing wrong with that because crypto is becoming a social space, which is good. But it doesn't make sense if you don't have conviction for those plays. So I have a slight suggestion here. I suggest having no more positions than you have fingers. And for all of you that have less than 10 fingers, it's okay. I only have 8 because I have 2 thumbs. You get it? No, I'm not trying to. Let's just move on. Dumb. Okay, so we got $1,000 per position size. Now we are well positioned to actually make some money, so that if I get 100x on my $1,000, so then I get my total capital size. So I've made a good chunk of change. If some of the other positions don't do as well, well, then that's okay. Because if I'm not doing as well with those other positions, at least I have one real big winner. And a lot of you are probably in this camp. Hopefully not a lot of you are in like camp of like having 50 open positions. Like that's just playing the roulette table. That's just playing craps. It doesn't make sense. Now, very few of you are in this camp, but the ones that are, hear me out, are going to be more successful at the end of this bull run. Why? Because less is more. And if you have less positions open, that means you're using more of your portfolio per trade. That means that your position sizing is going to be way bigger. So if I'm putting in $2,000, and again, the same scenario, if I make 100% on that or 1,000%, even better, then I'm walking away with 2 times my total capital. So which would you rather have? Having 50 open positions and when, not if, the market crashes, your positions all go real fast. You don't want that. If you have 10 open positions, that's good, but can you manage 10 positions when the market has a major pullback, which in a bull market is super normal? If you look at price action for Bitcoin in the 2016 market, we saw so many 20 and 30% pullbacks. It's a normal thing that happens. Even in the 2020 market, we had many pullbacks, about 20%. Those really hurt altcoins, okay? You do not want to be in that position where you get liquidated because you're overexposed and you have too many positions. If you have less positions to manage, you can make better, quicker, faster decisions, and you can actually end up with more profit. Now, one thing I wasn't planning on talking about, but it does come to mind because we're talking about dips, is using DCA strategy. And what I mean by that is using a simple DCA strategy, meaning that you put 1/3 into the first trade, then you put the remaining 2/3 into a DCA follow-up or dip trade. Okay, so we have our 1/3 of our total possible amount, and then we put in the remaining 2/3 if the price goes against us, which in crypto, that's like every day, isn't it? It's very, very rare that we have markets just continuing to go up and up and up forever. It's better to go into trades with the mentality that I'm pretty sure this is going to have a pullback. Let me at least prepare for a pullback. So instead of us actually putting in $2,000 per trade, we're only going to be putting in 1/3 of that. So we're going to be looking at something along the lines of $667 for that first trade. Now, our profit potential goes down for that trade depending on how much we're taking profit, which we're going to talk about in a second. But at least we're well positioned for a pullback. Okay, so it's just a couple of things to think about. This is the way I trade, and it treats me extremely well in bull markets because when there are pullbacks, because I know they're going to happen, I am well positioned to absorb that negative price action, buy more, average down my entry, and then when the price rockets back up, take profit with a lot more capital. It's a really good strategy, okay? Now, I want to go back to this chart over here on TradingView to just talk realistically. When we're looking at charts like this that are just going up and up and up and up, how many of you, when you were watching Dogecoin go up on this mega run, you see it move up 26% a day, you're thinking, well, gosh, it just broke through the 618 Fibonacci level. There's so much volume coming in. This is probably it. I'm going to start shorting it. Well, guess what? That's what all the futures and the derivatives traders thought because they got liquidated all the way up 48%. There's no way that anyone survived this. And as the price is moving up higher and higher and higher, maybe some of you thought, okay, it already moved up in 2 days. Gosh, 59%. So I'm just going to go ahead and add right now and then go for the next 50. Oh, wait, whoops. Oh, it's back down again. This is, this is the plight of the crypto trader, right? We see charts pump and we're thinking, gosh, it can't go any higher. Yes, It can. Ivan on Tech is famous for the respect the pump quote. Like, it's a beautiful way, a beautiful philosophy of looking at crypto because it's such a small space and a volatile space. Charts that have a 1-day pump can actually continue to pump the next day. I want to give you a tip, and I wasn't even planning on sharing this, but because you're awesome and you're still here with me and you've hit the like button, yep, thank you. You've hit the like button on the video and you've shared the video. I want to tell you this. The first big pump isn't the last. When you're looking at a chart like this and we have a major pump, honestly, this was the first big pump that we had. The chart, or rather the price of Doge moved up 12% in a day. That was a big move. Now, even though it pumped in the 9%, it had a pullback. What happened after that was fantastic. Here we go. Another thing. We got a big pump right here, 15%. The chart cools off a little bit, only to pump even more. Now, we've already had some really big pumps. Here's the next thing I want to add to this, okay? And let me do this. But pay attention to exhaustion. This is the big thing that a lot of people miss out on. The first big pump isn't going to be the last one, but pay attention to exhaustion. What does exhaustion look like? Exhaustion is typically going to be a wick, and it's a long upper wick like this, where there's a lot of buyers, but all of a sudden it's kind of losing momentum. We're seeing a lot of other signs like RSI dying, volume dying down. There are other things to look at, but the main thing to pay attention to is that if we see a big fat pump like this in a day, we could continue to see that pump going. But as soon as we have these big candles, consecutive big candles in a row, just understand that we should be cooling off. This is a huge move to make over 2 days. So those are just little freebies for you, okay? I want to go back to the sheet now with this concept. So let's do a hypothetical situation. Let's use this $2,000 portfolio, or rather position size in this trade. Okay, and let's go back to TradingView and put it in and think about it. So let's say that we open up our long position here on the pullback to the TBO fast line, and we're looking at support and resistance levels, and we're looking at it in the past. So we're thinking, okay, in case it has a pullback, I want to make sure I have a safety trade, or like I'm going to get stopped out here. I'm okay with that risk to reward ratio. And we take profit at 20%, and we're feeling so good, right? Only to see the chart shoot up, not 20%, but 200% after that. This has happened to you. And I know it has because it's happened to me many times, and it continues to. But the reality of this is that we can be well prepared for something like this, because if we think about not just position sizing, but if we think about taking profit intelligently, especially knowing that this is a bull market, we are so much more well positioned for success. I want to give you 3 scenarios here. If we have a position, and I need to shrink this so you can see it. There we go. Let's say we have a hypothetical position here, and we're talking about our total capital, right? So forget the total positions all here. Let's say we're going to use 25% of our available capital. So that means we're putting in $2,500 into our trade. So if we made 20% on that trade for Doge that I just showed you over here, the first one where it ends right here, 20% is a good return. But as we know, we're seeing it shoot up 200%. That means that we missed out on $5,000 of profit. We could have made a nice 2x on our trade, but unfortunately sold too early. Let's say that we didn't decide to use a larger position size. Let's say that we really just want to use a small amount of our portfolio because we want to make sure we have enough, right? If we want to have 50 open positions, then that's $200 per trade. That's actually 2%. So let's say with that 2% allocation of our portfolio, that means we're only going to be putting $200 that's available out of the 10,000. That's still a good chunk of money. And let's say you hit the next peanut. You hit the next meme coin that pulls a 30x. That earns you $6,000. It's amazing. That's such a good trade. But when you realize, wait, hold on a second, I only put 2% of my capital. Why did I not put at least 10%? That could have given me 30%. Or If I use the less is more strategy, like Aaron was telling me on the Coin Bureau trading channel, then I could be set walking away with 60K. It's painful. Here's another scenario that's often true. People put in half. They ape into a position. You're putting in $5,000 into one position, but you're scalping with it only to make 5%. That $250 is great. But as we all know, we've seen charts, again, like this, 20% is good. But I mean, even 20% here, that's a great trade. That's actually 10% of our total capital. But if we had let some in the trade, or rather kept some in the trade, I mean, there we go. We just made, in one trade, we made our total capital back. Now, I'm not trying to make anyone feel bad here, but this is the reality of trading, where we'll have someone that really likes scalping. And I love scalping. I actually scalp a lot of my trades. It's really fun. We have people that are using a small amount for meme coins because they don't want to risk a lot of money. And when you finally hit that 30x or even that 100x, the return is great. But compared to your total capital, it's not really that amazing, where you should be putting in more size. Or some of us that are taking profit at 10% using a respectable amount, maybe even just 20% of our portfolio per trade, right? That's still a good return. That's 2%, only to see it go up 500% over the next 6 months. Do you get where I'm going with this? What just happened over the last 2 weeks is a preview. The bull market is not over whatsoever. What I need you to understand is that position sizing matters a lot, that less is more, and using a DCA strategy is an extra little bonus where if we can use more, we can risk more up front, but be prepared for drawdown. Now, I'm actually going to use a really fantastic trading platform that I use for all of my trades, for bots, for all that fun stuff. There's actually a link to AllTrading down below. And AllTrading is a ridiculously fantastic third-party trading platform similar to 3 Commas or Pionex or like Trade Santa, Crypto Hopper. There are lots of them out there. The reason why I use AllTrading, actually the reasons why I use AllTrading are many. One is that it's the most secure third-party trading platform. You need a 5-word password just to access your account from a new device. They use individual API keys and secrets for every single signal bot that you set up if you're generating alerts. There are way too many reasons why to use this. This is the most powerful active trading platform I have ever used. And one of the best reasons why I use a third-party trading platform like this is because I can aggregate all of my exchanges. If you have funds across multiple exchanges and you're tired of having to log into every single exchange and you want to be able to monitor your portfolio and make trading decisions, not just see how the prices are going up and down, then you're going, oh crap, it's going down. I need to go into my exchange real quick and look, what's my 2FA? Okay, what's my password? All you have to do is log into one place, AllTrading, then you execute your trades. You can actually view your open positions, use bots, blah, 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 blah. Okay. So that's my spiel. Okay. But I love AllTrading. Now, we are using paper trading right now to respect my privacy. Although I've already moved the majority of my funds off. I actually converted pretty much everything to Bitcoin when it broke out of the bull flag. Don't you wish you did that? Anyway, so I'm sitting nice, fat, and sassy on my BTC stack right now. I'm very happy with it, okay? So I'm using paper trading just to show an example, and we have the chart here for Doge. Now, let's make a hypothetical situation similar to what we were talking about back over here on the sheet, okay? So let's do the idea of position 1. We're using 20% of the funds. We're going to be taking profit at 10%. So what's really cool about this is that we can say, okay, well, we're going to go ahead and place this order right here in case there's a pullback. I want to spend 20% of my magic money here, my paper trading account. So it's a lot of money. I could also say with my ladder order, it's automatically going to do a DCA order. So that way, in case there's a greater pullback for whatever reason, I'm prepared. So instead of going all in on this entry, I have an extra safety trade down here, or a DCA order right here. And you can see that the values are actually greater. We have 6,000-ish. Actually, let's just make this round. It's driving me crazy. There we go. Oh, of course. So we got 6,000 and we have 12,000. So this is what I was saying. 1/3, 2/3 equals our 3/3. Got it? Now here's where things get cool. When it comes to taking profit, we have lots of different options available to us. But what I want to show you right now is that not only can we just drag our take profit target, which is cool, but we can add multiple targets. We can even use scales that are based off of lots of fun things. But I actually want to use just targets right now because this is going to turn into an all-trading lesson. It's not meant to be. But what I want to show you right now is when we have the same take profit target, 10%, guess what? We're earning 10%. So we can see a visualization right there. It's really tiny, but it says 10% right there. Okay. Now, if I were to use 2 targets though, and let's say I want to take profit early and then take some way up here in case it pumps again at 44%, then my expected minimum profit, it's projecting it. It's doing the math for me automatically. So instead of me making my measly 10%, now making 27%. Better yet, I can say, well, in this first order, I don't want to use as much size because the reality is that when we use less up front, there's going to be more profits to be made up top. So now our expected minimum profit is actually 37.9%. Now, this may seem like, okay, this is all great. Sure. Okay. I think I understand. Here's how it becomes a lot simpler. Let's go back to the scenario that we were looking at before. We were looking over here at TradingView. We entered at, what is this? Sunday, November 3rd at about 14.5 cents. So let's go back. Sunday, I have to scroll down. Here we go. So Sunday, November 3rd, right there. So we're buying here. Okay. And then we want to take profit for 20% above that level because that's what we did over on TradingView, right? That's what it says over there. But because we know we're in a bull market, because we know that there's so much overhead, or rather price potential is a better way to say it, we want to make sure that we are spreading our take profit targets higher and higher and higher. And we can do that with AllTrading, which is great. So I want to go over here and I want to go to the weekly time frame. And I'm looking at this all-time high of 70 cents. So we can be greedy when the market is crazy bullish, like it is right now. But this is a big gap. If I take profit at 20% and then trying to take profit at what, 300%, 367%? Yes, I'm making 300%, which is great. But I might want to take profit on the way up as well. So I can say, well, I really want to take profit here just in case. Again, I'm buying here. I'm looking at the chart. I'm seeing, oh, okay, this seems reasonable. And then I can decide the weights. And the weight determines my profit potential down here as well. As soon as I start skewing the weight to be less, taking less profit up front, that actually allows me to earn more on the back end. Now, you might be wondering, well, this is great. Then I should just be using as many of these targets as possible. While it's true, you can use up to 10 take profit targets, and you can even spread out the size and the scale exponentially. You could have it be Fibonacci based. You could have the size scale be linear, so you're selling less up front and more towards the top. There are lots of options, but as soon as you start going here, you forget one of the principles I just shared with you. Less is more. In the same way, having more positions isn't better. So we can take that same principle and apply it to taking profit. Having more take profit targets is not better. We want to be very intentional and specific when we're taking profit. So while we can add a lot, doesn't mean we should. For me, I focus on doing like 3. That's pretty much it. Like I'm happy with 3. So the main thing that I enjoy doing, and I do a lot with all trading is I'll use 3 split targets. And that way I'm using something around this 16%, 33%, and then 50. So this way, what's happening is I'm going to be maximizing my profit potential. Now, for all of you permabulls out there that are saying, why even do that? Why not just sell everything for 237% or sell everything for 346%? Well, wise guy, the reason why I don't do that is when I look at the chart, and even in bullish conditions like this, there will be pullbacks right here. If we're saying, okay, I want to enter here and I'm going to ride this up and I want to take profit at this level because this is the high and I'm going to call it good, we don't know where things could go. So you can be extremely generous, but even still, when the price goes up, we will get to a point where the market will shake out your confidence. In a period like this, where we see, and this is the weekly chart, Doge was having a little bit of trouble here, just under 1 cent, only for it to shoot up from this point another 8,000%. So while you can set sky-high targets, my personal recommendation and what I teach, what I do is I take profit on the way up. If you go to my videos, go to the courses I have, go to my X page, this is what I talk about. Because for moments just like right now, if I go to, I want to go over here. If we go to the current day, right now, we go to the daily chart. Right now, currently, we're seeing a little bit of a pullback, right? There's nothing wrong with a pullback. We could still see Doge go a lot higher. But the reality is that if we're not taking a little bit of profit on the way up, we're severely jeopardizing our profit potential. We're also going to be causing ourselves a lot of stress. Whereas if we are taking profit on the way up just a little bit, then we're freeing up our capital that we can use to add more. So on a pullback to here, I can take my profits out right here. So this is where I'm selling, right up there. And this area is where I want to buy some more. There's nothing wrong with that. It's actually good trading practice to sell some, de-risk your trade. When there's a correction, you buy back a little bit more, you take your profits, you reinvest. It will average down your entry. And then when the price goes up, you're well positioned for more profits as the price returns to go higher. I understand that this video is getting a little bit permabull-y, but understand that the profit potential for a lot of the coins right now, whether it's a meme coin, it's a utility coin, it's DeSci, DeFi, don't care, exchange coin, whatever, everything has a lot of upside potential. It would be foolish of us, though, to take profits prematurely, to take profits way too early when the bull market is just getting started. So, my advice to you, spend some time looking at your portfolio. Think about how you have your portfolio allocated. Are you using too many positions? And you'll know when it's too many when we have a pullback, not if, when. And when you know your allocation, then you also are going to be disciplined. You know, I set aside, I'm going to have 10 open positions. So no matter what happens with those positions, if they're kind of stalling and not doing anything, but everything else is pumping, I just have to sit on my hands. It takes conviction, but that conviction will pay off because the crypto market will quickly rotate from one sector to another. So don't give up. There's still so much time to make so much more profit in this bull market to come. So again, I want to remind you, position sizing matters. Less is more. Using a DCA strategy really, really helps to de-risk your positions and to account for pullbacks when they happen. They are not if, when they happen, okay? So I would love to hear from you what you learned in this video. Leave a comment down below. If you haven't hit the like button, you know what to do. Smash the like button. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.